Hi everyone, I'm Kristina Lucrezia of Cointelegraph, Managing Editor at Cointelegraph, and I'm very happy here to moderate a wonderful panel about traditional loans versus flash loans. I'm here with wonderful representatives of the DeFi industry, and my first question, because we are talking about traditional versus flash loans, will go to James. James, you've been working in this industry for so many years. So what is exactly traditional loan? Why we call it traditional? And what problems DeFi try to solve in this traditional loans in general?
I think that the DeFi versus traditional, it's all about the documentation and permissions that you need to participate. The system in the United States and other developed nations has evolved to say that in order to participate in these systems, you need to be wealthy. Then we for some reason, equate being wealthy with being intelligent or being able to make good decisions. And really what it's about, from my perspective, is a way to control and make sure that you really deny access to part of the community. And the DeFi movement is really about the larger decentralization movement, where you're basically talking about giving broad access and equal access to people, regardless of their race, color, creed, and wealth and location, where people can now participate actively in the market. Now, having said that, I think DeFi is very young, and it's really we've gone through the first flash of what happens when the match touches the gasoline, but we're not really at a stable market yet. And so really what we're at is the beginning of the true democratization of access to capital-based opportunities, across nations.
Thank you very much, James. Stani, you founded Aave having in mind already this concept of flash loans, I imagine. What was the initial idea, and what is for you the main value of flash loans? Also, why are they called flash? Let's tell our audience a little bit about this.
Yeah, so well, the main idea to add flash loans into the Aave protocol was that in essence, the Aave protocol is kind of like a reserve. So there's plenty of funds available there. So how the protocol works is that anyone can deposit cryptographic assets there, such as ETH, stablecoins, and so forth, to earn yield. And then you can draw a credit line from the protocol. So you basically leave your deposit as a collateral there. And what happens in this particular situation is that there's always more value there in the smart contracts, which are securing the network from basically deficits. And there you have this kind of like an over collateralized system. And in terms of flash loans, what it allows you to do is to take that liquidity that is basically unused in the protocol and use it in a way without a collateral, without risking the protocol funds out there. And how it happens is that you basically borrow for one transaction, and then you repay that loan in the same transaction. And it's kind of like based on the atomicity of the Ethereum settlement. So in Ethereum, each block settles all the transactions, and in our there's different protocols how flash loans are basically technically structured, and in our current model, it basically works in a way that if you borrow without the collateral, you can do all kinds of different transactions within the DeFi space or in the whole on-chain ecosystem. But one of the conditions in this flash loan function is that you need to repay the loan. So if you fail to do that, all of those transactions that you try to do with the capital will actually fail. And that is how we have done it technically in the current version, and pretty much it really depends on the protocol how the flash loans work, but this is like the kind of like a grasp overview of them.
Thank you very much, Stani. Antonio, you founded another great project that includes not only lending features, but it's a trading platform. My question to you would be, who are those people? Who are those? Why and who exactly take on loans on blockchain?
Yeah, absolutely. So just really quickly, what dYdX is, we're just a platform for exchange. We focus on just margin trading and then more recently perpetual contracts on Ethereum. But basically the main users of dYdX, and kind of answering your question, are these traders that are oftentimes seeking leverage, want to go short on different crypto assets, want to go leverage long to kind of increase their potential gains and potential risk. So those are the types of people that are taking out these loans, and especially like these flash loans on dYdX. They're looking for leverage. They're oftentimes speculators, kind of looking for a profit. And that's kind of the main use case that dYdX fulfills, is just giving these people just a really nice interface where they can trade and take on these leverage positions really easily on a DeFi platform.
Wonderful, thank you very much. James, let's get back to you. So what is for you the biggest feature that makes loans on blockchain, the flash loans, more attractive to those people whom you named? So I want you guys to move towards this thing that actually flash loans are designed for developers. So who can and why becomes a developer who takes a loan, and which opportunities give this landing to them?
Well, I think flash loans are a very specific product within the DeFi environment. The flash loans, to me, really are about arbitrage, right? Because you're opening and closing the deal simultaneously, and the question is, can I end up, after pressing this button, can I have more ETH or more Bitcoin in my account than when I'm done, right? And traditionally, to do that, I had to take risk, and one of the risks was capital, and the other was timing, and the third was execution. And what flash loans have done is package all these things that I would have had to have a team and a bank account and lawyers to establish. I would have had to have a counterparty, and it would take weeks to get these things done, or at least to set up the modalities to be trading, and costs that would be inherent, and I'd have to be an expert. And now what I can do is say, wow, I'm looking at how ETH futures are trading on one market and how that's represented in this wrapped ETH in another place. And if I can buy one and sell the other simultaneously, I can end up, in a better position. And so what we're doing basically is, again, democratizing access to the opportunities and rewarding people for being smart as opposed to being wealthy. And so again, not to be so political about it or socialist about it, the idea here is that this basically opens up the community of people that can take advantage of their intelligence to a wider group of people, and to people who historically might not have been able to get credit or might not have been able to get the intermediaries to pay attention to them, that you no longer have those barriers or entry to the system.
Stani, designed for developers, what does it mean for you? Like, if a person is not a developer, can the person become a developer, and how? What is the expertise needed in order to work with flash loans on your platform?
I mean, this is a good question in terms of that, like historically, blockchain technology, especially like Ethereum, in the very beginning, wasn't so easy to build upon. I mean, there wasn't many tools. The logic is a bit different. There's some constraints, and the resources haven't been available. But over the time, it has definitely improved. There's been quite a nice amount of hackathons and different libraries that help developers to come around and build interesting things. But what's interesting here is about DeFi and whole like topic of this flash loan and liquidity, without any kind of like front capital, is that we tend to see DeFi as a way of like we have a permissionless access, permissionless access to different kinds of products and services. You could use, you could go and use with the same account dYdX, Aave, and create DAI stablecoin maker. So you can do everything in this kind of like universum in an interoperable fashion. But what is even more important, that we have actually interoperable and permissionless way to build things, build new financial products where you don't need, for example, the capital up front, which basically means that anyone, any part of the world could build the next financial application that could be used by globally anyone. And that's like the killer feature, I think, in kind of like in DeFi, and also kind of like the liquidity, and also boils down to the flash loans. I think being a developer or kind of like and what flash loans relate to that, I definitely see it as a developer tool. So you could build different kinds of things. There is a project called DeFi Server that is using flash loans to close positions in MakerDAO or refinance loans and so forth. So it's a project that is servicing end users but are developers. But there's also projects where you could create flash loans without coding skills in this kind of like no code infrastructure. But I guess end of the day, it's all about creating new products, and whether flash loans are used by some people that arbitrage, but I see just them as a way to create new products as well.
Interesting. Even though I would prefer James' formulation, so flash loans is designed for smart people rather than developers, because in the end, well, you can always learn to be a developer. Antonio, if we talk about these developers who are able either to code or at least to build up a flash loan, how has the community changed during the last year? So the DeFi market capitalization is growing. What about the community itself? Do we see that more people are able, are educated, are willing to risk, are willing to learn?
Yeah, it's a great question. So I guess, first of all, I think there have been obviously a ton of new developers that have kind of come into the space, and like Stani alluded to, just building like really great products. I totally agree with his take that like flash loans are for developers. That doesn't mean that they're not for everybody. It's just like the way most people will interact with them is through a product that somebody builds. You don't have to be a developer. You don't have to like literally write Solidity to be able to interact with them. You come use, Aave, come use dYdX, use like DeFi Saver is a good example of this. You don't have to know how to code to be able to do that. And I guess to address your question, like how has the community changed in DeFi in the past year? Certainly changed a lot. I'd say overall it's grown quite a bit. And there have been a lot of like really amazing things that have happened in the space in the past year. Just, I would point to basically all of the really interesting products that have been launched. I think Uniswap v2 was super successful, like seeing tons of volume on Uniswap. Obviously Aave has made a ton of strides in like the lending markets in the past year or so. That's been really awesome to watch. There have been crazy experiments, like things like YAM finance and stuff like that, which people may have been following. But just a lot of experimentation overall, I think, has been the real theme of the past year. And kind of alongside that and accompanying it has been just a lot of excitement, especially around a lot of the token launches, around a lot of the liquidity mining, things like that. That's what really brings the community like into the ecosystem too, gets them really excited and oftentimes like financially motivated to have a skin in the game and use these products, try them out. But I think for the first time in the past year, DeFi is solving real problems too. Like all this permissionless trading, kind of democratization of finance that James alluded to, it's really been happening in the past year. And that's what we're really seeing go on with things like Uniswap, things like Aave, compounds, to a certain extent like dYdX in the past year. And it's just been really exciting to watch.
Yeah, I totally agree. That's really exciting. James, if we talk about other benefits of flash loans, so we talked about interoperability, we talked about transparency, we talked about accessibility. What about security?
Well, I think that's the big question right now. And that's really what's happened is, and the boom and the bust was totally predictable. The hot money chases after these technologies, and these changes in tech tend to attract people to think about the impact it has on money first before they think about the impact it has on society or laws, et cetera. because people like money, and it's the easiest way to market to someone, right? But you know, what's happening is that people are not really understanding what they're getting involved in. And the risks are, to people that understand what's happening, are relatively straightforward. But even the most sophisticated people don't fully understand every piece of yield farming that comes out. I mean, you know, like in the last month, 17 different vegetables and food types came out, right, as, you know, as DeFi products, you know, and there wasn't enough time in the day to actually understand them all. And the way that you protect yourself in, you know, in this new world, when you get away from centralized authorities, is by actually knowing what's happening and taking advantage of the intelligence of the crowd. But when things get launched overnight and pop up in a day, then the crowd really hasn't had a time to opine yet. And, you know, the early guys in, you know, they always say, you know, that you know, pioneers get arrows in the back, right? Because they ran too fast and they ran past the danger, you know, and then find out about it first. So what's happening is that people are going along the greed and fear of missing out curve. And so people are jumping in and maybe taking risks that they don't fully understand, maybe getting lucky the first time, so thinking they know what they're doing. The truth is, you learn a lot more when it doesn't work than when it does. And so, you know, I think this is just a natural progression. People think that markets are even and quiet, and that everything comes to equilibrium, and market theory means that everything's balanced and equal. But actually, that's not true. If markets didn't have imbalances of information and power and knowledge and time, then you wouldn't have a market, because everything would be perfectly priced and there'd be no reason to trade anything. So the reality is that what makes markets interesting is the imbalance in information, the imbalance in time, the imbalance in access, right? So what we're going through now are these big gyrations that are the market trying to find equilibrium over time with fewer breaks, and it's easier to jump in. So you'll see the wave will have bigger amplitudes, you know, and that will bring in people saying it's just a fraud or it's the greatest thing since sliced earth. And the truth is, it's neither, right? It's just the beginning of a process, and it's how groups learn, you know, by going through these processes. And so I think that what's happening right now is we're just all learning, and that DeFi will look different. All this stuff is going to resolve down to much more simple platforms where you can basically log on, deposit your value, and be able to toggle a switch and understand what's happening to it, and know that there's been a history behind it, so you can have a greater sense of security, because it seems to have worked so many times before. And right now we're just in the early cycles where you don't have that knowledge base.
Very interesting point. So knowledge from the users, but also from the projects, in my opinion. Stani, I know that you, Aave, joined the Global DeFi Alliance recently, where dYdX was one of the founding members. What is, in your opinion, guys, the level of cooperation between DeFi projects at the moment? And how can it contribute to the maturing of the overall DeFi space?
Yeah. So I think like cooperation is very good. I definitely think there is good amount of it in terms of like the DeFi alliances and also kind of like the founders and different projects that communicate between each other. But I think what's even more important is that many of the DeFi projects are basically following the DeFi narrative and how things are going. What's kind of like what's important to highlight, for example, these days, where and kind of like those particular things is quite important. And I think recently there definitely has been like a bit of drawbacks, in the sense that some of the projects have launched very quickly in without any kind of security audits, and it's kind of like troublesome in the sense that many of the projects here are building quite a long time the reputation, and it takes just so little to kind of like tarnish that reputation of DeFi, because end of the day, like not everyone will kind of care about the decentralization, even though if it's a backbone of the whole ecosystem. But I think in general, like the cooperation is pretty good. The thing is, of course, like all of the projects are quite busy. I'm pretty sure, for example, dYdX has a lot of things to do, Aave has a lot of things to do, and we still try to kind of like contribute to many things as possible. But I mean, we're small projects in the sense, and I think DeFi is moving now towards this kind of like more, monetization and, like generating fees in the protocols and starting to grow in the next 5 years. And that will actually put more resources and also like it will be seen in all kinds of things, such as like legal ice breaking and also like corporations.
Yeah, absolutely. Just want to echo that. I mean, I think there is a really good amount of cooperation that goes on between DeFi companies. I think one of obviously the hallmarks of the DeFi space is transparency. That's like one of the really great things about using DeFi protocols is you can look at the code, you can see exactly what's going on. All of the kind of top projects have a good history of just being really transparent with their community and things like that. But also that transparency kind of cuts both ways. And this is really good for the industry because also in addition to just like users having a lot of transparency into what, various protocols are doing, other protocols are certainly looking at what every other protocol in the space is like doing. And that just makes, the rate of innovation like that much faster. If Aave comes out with like the next great feature, well, of course, like we're going to look at that at like dYdX. We're going to, try to offer that to our users as well. And I think this is just like really great for just like users of the space in general, just in terms of like the rate of innovation. Like, everybody saw what happened with like yams, for example, and then there was like a ton of innovation like based off of that. So it just kind of incentivizes everybody in the space, since everybody's being so transparent, to just kind of be on the same side. And I think everybody really realizes that it's still very early days for DeFi, and just that the best thing for everybody's interest is to grow the space overall. And I think that's pretty much what everybody is trying to do.
In the space, you mentioned that I like this a lot, but at the same time, we also need to bring more people from the other spaces. So my question is, back to the headline of our panel, traditional loans versus flash loans. What is it we can learn from traditional loans in order to make the DeFi market more or expand, more mature, etc.? Not only in technical terms, but in terms of building up the infrastructure, in terms of building up the community. What can we learn from traditional loans in order to really make the DeFi loans the future? James.
Wow. So I'm the founder of Crypto Mondays, which is the largest decentralized meeting, for crypto globally. And we're in 55 cities and like 20 countries. And it's my big belief is that the thing that's different about this whole movement towards crypto and decentralization, is community first, where the thing that's valuable now isn't the capital, it's not the code, it's actually the community. And so historically, the community of people that could participate in these types of activities was small. It was, I hate to say it, but, white Christian males, essentially, sitting behind desks with, glass windows, and glass offices. And that's been changing. That's now democratized. Behind a computer screen, you don't know who's participating. So the community has gone from people who are in the business of doing loans and who are being paid as intermediaries to actual, participants who are trying to achieve goals for their lives and are using their computer screen as a way to support themselves or to support the activities that they're pursuing. And so it's really a big change. What you're doing is disintermediating this class of people who've been entitled and who have been taking profit from your dreams, to quote, a folk song, and to move on and now allow people to imagine how they could, become their own profit center, become their own business, become autonomous, and start to use the intelligence of the crowd and the accessibility of the platform to start to accomplish the same things they were doing previously, but being forced to do it in a way that previously the system told you how you get a loan. Here's the process. You have to have a credit score, which is the biggest scam on the face of the earth, right? Then you had to have a bank who would listen to you, right? So then you had to have documents from the government to prove that you're legitimate, right? And then you'd have, and you go down the list, and what they're doing is just whittling away, narrowing down, so that other people are making a profit and a living off your dream, off what you're trying to do, right? And now what DeFi is doing, and this whole movement, is enabling me to say, okay, I need to fund this next activity. What's out there that I can use my intelligence and my knowledge where I can create that cash flow where I don't have to tell people who I am, and I don't have to sell my soul to get a car, right? And that's really so the audience is changing from the bankers who are doing things for you to the individuals who are pursuing their own activities. Hope that's not too philosophical.
I like this philosophy. Last philosophy from Stani and Antonio.
Yeah, I mean, education definitely, like that people understand the benefits of DeFi and like why it's important, because it's as James put it out, it's the thing is way bigger than we anticipate. There's so many benefits, but people need to understand them.
Antonio.
Yeah, absolutely. I completely agree.
People who give us traditional loans, let's also bring them to the flash loans market.
Absolutely. That's what we're trying to all do. And yeah, I think there are a lot of learnings that we can take from just the traditional space, just in terms of like building really great high quality products that people can use, making it really easy for everybody to kind of come into this new financial ecosystem. And that's certainly what we're all trying hard to build.
Thank you very much. Thank you very much, guys. I definitely learned so much today with you. I hope our viewers as well. Thank you very much for the organizers of the summit, because this is one of the way to educate the community and the space. Thank you very much. Have a great day.
Thank you, guys. Thank you so much.